Hello, I'm Finola Burke from Research as a Service, and today we're focusing on Pureprofile, ASX ticker PPL. And joining us is Managing Director and CEO Martin Filz and COO and CFO Mel Sheppard. Thanks for joining us, Melinda and Martin.
Hi, Finola. Great to be here. Thank you for having us.
Hi, Finola. Thanks for having us.
I might start with you, Martin. You recently reported a very strong third quarter with revenues up more than 40% on the PCC, and what is seasonally a much quieter quarter. What particularly pleases you about the group's performance?
Look, Finola, the strategy that we've had in place for nearly 2 years now is to grow the company globally from that strong base in Australia where 20% of the ASX 200 use us, to actually replicate that overseas. And we've been in the UK market for about 9 years, and we've opened a couple of new markets. Recently we opened a Malaysian office, grew out our Singapore office. And really, what's pleased me especially is that growth that we're seeing overseas. And overseas, quarter on quarter, grew 51% versus quarter last year, which is fantastic. And Australia is doing really well, grew 25%. So that's especially what I'm proud of, is our global expansion is working.
And Melinda, just as Martin mentioned, Q3 saw a big injection revenue from regions outside Australia, and you had 50 plus new clients as well. Is this something we should expect in future results from Pureprofile?
Absolutely. So, you're aware that our corporate strategy really is growth outside of Australia. We see that we have low market share in countries such as the UK and the US. So our strategy is to absolutely grow into those regions, continue to hire senior sales capability and grow the revenue from that perspective. But just to give you a bit more context around that, we've been working on a 3-year plan over the last couple of months. And what we're seeing with the modelling that we've been doing is that by the time we get to FY24, that the revenue that we will see from outside Australia will eclipse Australia. So at the moment, 60% of our revenue is Australian-centric, the remainder across the UK, US, Netherlands, Singapore, New Zealand. And then by the time we finish FY24, that number, the quantum outside of Australia, will be far greater than Australia. And we're expecting that will be around about 30% of revenue in Australia compared to the rest of the world. So you will continue to see the same trends. Yes, absolutely.
And repeat customers has also been a big feature of particularly the last 12 months. It was up around the 35 million mark in the last 12 months. Are you expecting that number to grow and to continue to grow?
Yes. So that's a really great question. So we absolutely measure the dollars of revenue from repeat customers because we are going into new regions and we're growing, bringing on new clients. We look at not only new client revenue, but how much are we getting from existing customers and are they continuing to spend with us? Now, what's really pleasing, particularly in this quarter, when we look at it from a rolling 12-month perspective, we had $35.2 million worth of repeat business over the last 12 months. If I go back just 9 months, that number was 29.4 for the previous 12 months. So we're going to continue to grow our existing client base and grow the revenue that we deliver from them. At the same time as focusing on new regions and new customers as well. So you should absolutely continue to see that number growing over time, as well as our annuity revenue as well.
And Martin, you've often stated that your longer-term goal is a continuation of the growth in the EBITDA margin. What steps do you need to take as a company to realise that ambition? And are there any companies on a global scale to which you look to for benchmarking?
We've seen the EBITDA percentage grow for the business. So I think 2 years ago it's 5%, then 7%, then 10%. So year on year it's been growing. So absolutely, that's a focus for us as a business. And I think it comes from 3 areas. Number one, an obvious area, the more revenue you do and the more that flows down to the bottom line, the EBITDA grows as long as you keep an eye on the cost base. And Mel and I have an absolute focus on being cash flow positive. And as an organisation, we've been cash flow positive for 7 or so quarters. And that's a key focus. All our investment is within our existing cash flow. So growing revenue, grows it. The second one is being more efficient. So through our own internal technology, understanding how we work with clients, do work more specific work with clients, to do that more efficiently, as I said. And then thirdly, the mix of products. So introducing our SaaS products into what has been an operational business before. So those three main focuses for us grow EBITDA. And I think for everybody listening, a good example of where we're heading to is YouGov. They're publicly listed in the UK stock market, so it's easy to see all of their financials. And those ratios certainly are a target for ourselves.
Well, I'm looking forward to touching base with you again in a few months' time to see how Pureprofile is progressing with its performance in the market. Thank you for your time today, Martin Filz and Melinda Sheppard from Pureprofile.
Thanks so much, Finola.
Thanks, Finola.